connecting with our experts. And with this, let me welcome on board two of our very special guests onto the show. We are being joined by Rajesh Palviya on the technical side, Head Research, Derivative Research at Axis Securities, as well as Ashi Anand is also joining us. A very good afternoon to both of you, and thank you so much for your time. Rajesh, firstly, this record run is seeing no stopping, and every week the kind of a move that we are seeing on the benchmark indices is quite surprising. For the next week, do you believe that markets should consolidate, take a breather, or do you believe that the data pattern is so strong that it will just go on?
Yeah, good afternoon, Srishti. So it's early party is happening on the street ahead of this festival, like Christmas, and I think the kind of momentum, the kind of flow which is coming into the market, that clearly shows that yes, this momentum can continue further as. The left out feeling is there. There is a comfort from the global market. Most of the macro indicators now again, coming back to the favor of market. So all risk which was looming on the market, that is, cooling off. So I think that is clearly giving the confidence on the street, and that's why we are seeing, on a consecutive basis, we are seeing that Nifty is gaining, and the kind of run we are seeing across the sector. And now the new sector that you already spoke about, IT, that is now adding up the more, support to the market. And I think this really can extend further. Looking at the Nifty setup, the call writers are now on back foot, and now they are shifting their writing position to 21,600, 21,700. There is no as reward for the call writer in last couple of weeks. So very thin position on the writing front. Put writers are very aggressive. Base is continuously shifting higher. So now 21,300, 21,250 are the immediate base for the market. Until these levels are not broken on the lower side, then trend is likely to remain on the bullish side. On the higher side, 21,500, 600 are the immediate level where Nifty can continue for the more upside. And when we can see for the more higher level also, the kind of buying interest is there in market. Maybe we can see a level of 21,800 also in coming week. So Nifty is looking bullish. Bank Nifty is showing very good traction now. The Bank Nifty is now trading at 48,000 level. Looking at the data, most of the short covering action is already done for the day. And looking at the data setup now, call writers have shifted their position to 48,500, even 48,800. So I think there is no confidence on the call writing front. So there is no stoppage for Bank Nifty at this moment. And we expect if we continues to hold above 47,700, then possibly Bank Nifty can also show further more traction towards 48,600 to 48,800 also.
Well, so 41,800 level can be achieved for Bank Nifty as well as for Nifty 21,800 in a couple of weeks. That's the word coming in from Rajesh. But over to you, Ashi. My question is on the Nifty IT index. The mood has completely changed for Nifty IT. We are seeing Nifty IT at 52-week high level. And so what do you think, even Gartner has given a projection that the IT sector can see good growth in the coming years. So what do you think, and which bucket would you prefer, the large caps or the mid caps?
So IT is clearly a sector which has turned, right? I think if you're just looking at IT and what IT has been doing over the past year, this is clearly a sector which has been underperforming. Markets have been moving up, but this sector has actually not been participating. Now, the key element is you've been waiting for the global economy to turn around. And I think what you've seen with the Fed and with interest rates now clearly having peaked, and the Fed giving indications that over the next year, you're likely to see up to 3 rate cuts. I think the worst of economic pressures in terms of the US and Europe are starting to recede. You're seeing this in terms of the 10-year GSEC yield in the US moving down from 5% to now below 4%. So high interest rates, which were a major concern from an economic perspective and economic growth in developed markets, has started to those concerns have started to recede. Right now, this is basically what was capping kind of IT demand. And if you just go back to the last quarter results of IT, you saw very favorable deal wins in terms of larger deal wins, but discretionary spending was under pressure, right? And that's why kind of these stocks were underperforming. Now that you're starting to see signs of some of these clouds starting to lift. You are kind of seeing some momentum coming back into the space. Between large and mid cap, we actually are a little more comfortable with some of the larger cap names, primarily because valuations are a lot more favorable. If you're looking at the mid caps, there are pockets within here where valuations are a lot more expensive. You can buy into Infosys and TCS at significant discounts to some of the smaller companies. Now, while we are cognizant about the fact that some of these smaller companies are growing faster, I think from a growth valuation balance perspective, we are a little more comfortable in terms of the larger cap names.
Okay, so a little more comfortable with the large cap space, and Infosys is something that one can look at this point in time. But Rajesh, coming to you to have your take on the metal space, because one such factor that we were observing was that dollar index has hit its 4-month low, and whenever there's a fall in the dollar index, then metal counters are expected to shine across the board. International markets as well, we have seen a lot of these commodities inching up once again, and especially in India's perspective, all these metal counters were shining. So any such stock that is on your radar where you believe that there's a lot more potential to perform in the upcoming weeks?
After consolidation of 4 months, now metal index again managed to give breakout. Nifty metal index managed to give breakout, and now it's enjoying all-time high trajectory at this moment. And looking at the behavior of most of the metal stocks now, some of the stocks are already given the breakout. The stock like JSW Steel, Jindal Steel and Power, these all stocks have already enjoying their all-time high kind of trajectory. So we believe that JSW Steel is one stock where one should focus at this moment. That clear outperformance is there. After a brief consolidation, that stock is now moving in up sloping channel on the weekly chart. So this stock can continue furthermore upside. On the higher side, we can see a target of 920 to 940. One can buy this stock with stop loss of 830. Another stock that we like, that is Hindalco. Hindalco is also looking promising at this moment, and looking at the monthly chart, we believe that the kind of breakout which we are observing on a 6-8 month consolidation, this stock can also scale up to the next target of 600 620. So now one can buy Hindalco also with stop loss of 525.
Thank you for that, Rajesh. So Hindalco as well as JSW Steel on Rajesh radar that you have to keep an eye on. But with that, let's slip into a short break and we come back with more clarity on the market from a panel of experts.